Well, there's no beating the market blues. It's still down about 100 odd points for the equity markets. But let's find out whether it's the same situation in the commodity space or not. Manisha Gupta is joining in. Manisha, is it as bad there? And what's the commodity that you're looking at today?
Well, really bad. And I don't want to look at this market anymore for a few days. But yes, I'm looking at the crude oil prices and another 5% of a decline. So after 3 days of decline, today has seen some bit of a buying. But you wouldn't want to read too much into this. We have seen the Brent prices decline from 88 of a high to 74 of a low on your screens. We've actually seen a low of 73.5 as well, but from there some buying coming in. So 5% of decline in the overnight markets, and when you look at this week, rather last 3 trading sessions, we've seen 11% of decline for Brent and 12.5% of decline for the WTI prices also. And with that fall, we're trading at the lowest in 15 months for the crude oil prices there. What we also do understand is that many people were long because there was this whole conversation about Russia sanction impact and the Chinese demand coming back. So many of those hedge funds right now are liquidating their longs, is the reason you are looking at 3 to 4 to 5% just go in matter of minutes there. Also, the crisis in banking sector could trigger cut in demand. That's yet another concern. While we still are awaiting most of the global banks and brokerages to come out with their new forecast for the crude prices with the kind of decline that we have seen. The dollar index after that initial decline also has started to gain up, so that's weighing onto the markets too. And then the rising interest rates, economic uncertainty, the risk of sentiment that we are seeing in other currencies, global equities also seems to be weighing onto the markets there. The only one thing that you would want to still watch out for the next quarter or the second half of this year is that IEA and OPEC all seem to be telling you that the Chinese demand, once it comes back, there could be tightness going forward in the second half, and that could still take the crude oil prices to $90 to $95 as well, from 75 of current level there. But take a look at the range on what we have seen in sense of crude prices in the last year and this year as well. So it was nearly $60 of a range last year between 130 to 75. And this year, in the first 2 months, including March as well, we've done a high of 88 and a low of 73.5. So 15-month lows and 2023 lows as well coming in on your screens.
All right, Manisha, thank you very much for that. Well, 113 points lower.